All right, let's get right into it. Today we're talking about SAMHI Hotels, a really huge player in India's hospitality scene. Their latest investor report just came out, and honestly, it tells this incredible story of smart, strategic growth that we've just got to break down.
And we have to start with this number because, wow, it is just jaw-dropping. A 353.8% jump in profit year over year. You don't just stumble into numbers like that. It's the result of a very specific, very clever plan. So, how on earth did they pull this off?
Well, to really get the numbers, you have to see what's behind them. We're not just talking about figures on a spreadsheet, right? We're talking about gorgeous, high-end properties like this one, the Hyatt Regency in Pune. This is the kind of asset that's at the very heart of their portfolio and their entire strategy.
Okay, let's start with the quarter itself. The big story here isn't just the crazy growth, it's the resilience they showed while doing it. It wasn't exactly a straight line up.
So what you're seeing here is some seriously impressive consistency. There's solid growth pretty much everywhere you look. Total income's up 13%, and their EBITDA, which is a really key measure of profitability, is up almost 19%. You add that to the massive profit jump we just saw, and it paints a picture of a company that is expanding in a very, very healthy way.
But like I said, it wasn't a completely smooth ride. And you know what? The company is totally upfront about a dip they had in May. You can see revenue growth slowed to just over 4%. They point directly to geopolitical events that hit travel for a bit. And that kind of honesty, well, it builds a lot of trust. And this slide just perfectly shows the bounce back. These are their own words from the report. You can see how quickly things snapped right back to normal. By June, growth was almost back to where it was in April. It just proves that the underlying demand for their hotels is strong enough to handle these short-term bumps in the road.
So how do they keep this kind of growth going? Well, that brings us to the absolute core of their strategy. It's something they call capital recycling. Let's dig into what that actually means.
In the simplest terms, it's all about being a smart, active investor. So instead of just buying a hotel and holding on to it forever, they sell certain mature properties that have kind of hit their peak value. Then they take that cash, the recycled capital, and pump it right back into new projects that have the potential for even bigger returns. It's brilliant. And their whole strategy is like a four-step dance. First, they find and acquire hotels smartly, usually getting a good deal. Second, they give them a major upgrade, bringing in huge international brands like Marriott or Hyatt to really boost their value and appeal. Third, once that hotel is a top performer, they sell it for a premium. And finally, you guessed it, that money goes right back into the machine to fund the next big thing.
And listen, this isn't just some theory on a PowerPoint slide. They are actually doing this, and at a huge scale. Get this, since 2023, they've sold over 2.1 billion rupees worth of assets. And they sold them at a fantastic price, about 20 times earnings. That's a great return. Then they turned around and reinvested over 10 billion rupees into new growth projects. The machine is working.
So that's the playbook. Now let's look at the blueprint, where all that reinvested cash is going and how it's literally building the future of the company. This is where things get really exciting.
So here's a snapshot of what SAMHI's portfolio looks like today. It's pretty balanced, you see? About 42% is in the high-end upscale and upper upscale segments, and the rest is spread between mid-scale and upper mid-scale. This is their starting point.
But this is not where they plan to stay. Not at all. Here's the big ambition. They want to dramatically shift that mix. The goal is to take their upscale portfolio from 42% today to a whopping 60% of their business by 2029. This is a deliberate, aggressive move upmarket.
So what does this move up market actually look like? Well, a picture says it all, right? On the left, you've got a perfectly nice, clean, efficient mid-scale room. On the right, an upscale room. More space, more luxury, better amenities. That visual jump is exactly the experience and the higher revenue per room that SAMHI is going after.
And they are definitely not just talking about it. They are building it. This is a look at the future W Hotel in Hyderabad. Now, if you know your hotel brands, you know W is one of Marriott's top-tier luxury brands. It's all about style and energy. This project is a massive signal of their high-end ambitions.
And it doesn't stop there. In Bengaluru, they're developing this huge dual-brand property, a Westin and a Tribute Portfolio hotel, adding another 362 premium rooms to their collection. These are big, expensive, concrete bets on the future of the luxury market in India.
So they've got the strategy and they've got the projects in the pipeline. But what's the fuel for this engine? Let's zoom out for a second to the big picture and see the financial firepower that's making all of this possible. Okay,
A huge piece of this puzzle is their partnership with GIC, which is Singapore's sovereign wealth fund. Now, this isn't just about a 7.5 billion rupee cash injection. This is a massive vote of confidence from a world-class institutional investor. It brings money, yes, but it also brings expertise, credibility, and a shared vision for building out that upscale platform.
And when you put it all together, the profits from their capital recycling, this new GIC partnership, and their own operating cash flow, this is the number you get. They're projecting an investable surplus of over 17 billion rupees over the next 5 years. That is a massive war chest to go out and acquire and develop new properties.
Which of course leaves us with the big question. They have a proven smart strategy. They have the financial backing of a global powerhouse, and they have billions of rupees ready to go. Is this the perfect formula that will allow SAMHI to not just compete in, but to truly dominate India's booming upscale and luxury hotel market? We'll have to wait and see.